Good morning. It's Monday, February 5, 2024. I overslept, so I missed my silver bullet and not feeling optimal, but I'll be okay. Always do. God is good. Okay, so let's look at oil, CL. I've been watching oil, and oil is very clean when it moves. As you can see, I did a bar replay in trading view. So I came here and I didn't look at anything. I just moved the chart out of my sight, went to 215 because I like the 220 macro, and let me see what price is doing, what it did so far, and what it's doing moving into 3 a.m. silver bullet. So what did I do? The first thing I did was, let me move this stuff so we can see. Well, this arrow was, I did a pre-market assessment last night before I went to bed, and this arrow was just me predicting price direction. I had it to go up to equilibrium. I saw lower prices, so I had price to go up to equilibrium of Friday's dealing range and then come down and break Friday's low. So that was my prediction, 16:55 yesterday before the market opened. So it looks like price did do that. But when I woke up this morning, just now, and I saw that, okay, price looks like it did go up, but it didn't hit equilibrium and it's coming down. I looked to see what are my confluences or what's gonna dispute that. So I marked out relative equal highs, relative equal lows. I looked for some kind of consolidation, which I saw in this area. And I saw that price went up and took out the highs first, traded into a volume imbalance, respected that, and came down, took out the equal lows, closed lower. So at 220 macro, I was looking for price. I identified this bullish fair value gap. And I said, let me see if price trades down into that, gives me an order block and a fair value gap. After it reverses, trades back into it, respects it to go higher. Or if it's going to disrespect this bullish fair value gap, I'm treating it like an IFVG. I wasn't interested in inverted fair value gaps, but I see the power of them. So I'm using them now. So I watch price at 220. This is the 220. It came down. It didn't break any lows, but it respected the fair value gap. So I said, let me see, is it going to give me a order block? It did, but it didn't give me a fair value gap with these two green candles to give me a third candle to create a fair value gap to trade back into. So I said, let me watch a little longer. And price did its due at 3 o'clock open. It took out the swing high, but it respected a volume imbalance and came back and closed within the range, which I found interesting. Excuse me. So I said, I'll watch a little longer. I then identified, where's the fair value gap that I identified? Nope, I don't see it. I guess it wasn't a fair value gap. No bullish fair value gap. So I said, okay, let me see what price is going to do with this bullish fair value gap that I identified. So price continued to come down. I watched this 3 o'clock candle, bullish candle, and I said, let me see if it's going to close below that first and give me a change in state of direction, create an order block, which it did at 320. And then I said, let me watch it close now below this bullish fair value gap. Once it does that, then I know, okay, price is going to go down. So it did it here at 330, closed slightly below the fair value gap. So the next candle, I said, if it does not break these highs and continue, I'll jump in, which is what I did. And I targeted a 2-to-1. And as you can see, it hit the target, but it came down and closed well below it, which I liked, created a fair value gap, respected it, which I liked. So, yeah, that's it. So, what did I do? Marked out the equal highs and those I looked for obvious consolidation, waited for price to break either direction to trade in the other. So, it took out the highs, respected that volume imbalance, came down, took out the lows to continue, close lower. What did I use to ensure it closed lower? The fair value gap bullish. If it does not respect it, it's going to go lower, which it did here. And went in and took the sell.